Namaskar traders and a very good evening. Well, 20th of December, Tuesday evening, 8:45 p.m. Indian Standard Time. And let's start with the global markets first. I think that'll make more sense. The US markets are bouncing back from their intraday lows. Both Dow Jones and S&P are mildly positive. Let's quickly take a look at how S&P is behaving. As you can see, it's bouncing back from its lows. It has given a huge sharp sell-off recently, breaking below the current supports. So what we're seeing is essentially a bounce back after this one-way sell-off for the S&P. This will mirror on the Dow Jones. Also, we see a pretty decent divergence on the momentum indicators, which suggests that this fall should slow down a little bit and decide whether it wants to reverse or continue further down. Not to forget that continuation is easier than reversal. SGX, as we discussed tonight, is up 41 points, trading at very close to that 18,500 mark. It's at 18,468, 469. So not bad from what we see right now. Interestingly, it is crude that I'm keeping a very close look at. I think I discussed this a couple of days back in one of our videos. But I feel that in this entire sell-off, after every time it has managed to give us a bounce back, they were always one-legged move. And I think that looking at the price behavior, I feel that we have a second leg coming up from this congestion that we're dealing with right now. I think in the next 2 to 3 trading sessions, this will get proven right or wrong. So SGX, not bad, 40 points positive, 18,468. Now let's go back to the sectoral indices. Starting off, we'll start with the broader markets. Nifty, what a day it was. I think you can say that it was quite a crazy day. Market opened weak, stayed weak, and towards the afternoon it was a very, very sharp bounce back. Now, when it was falling and when it was somewhere down here, clearly this was proven to be a dead cat bounce. This was proven to be a false bounce back. Most of the time, when we get these kind of dead cat bounces or a proven false bounce back, prices do not generally bounce back like this in the afternoon. They tend to stay down, maybe make a soft landing, create a base formation and then bounce. But this is too much to handle, if you ask me, for in just a day falling like this. Just halt for an hour or so and then an equally strong bounce back makes pretty difficult to create any kind of consistent directional clarity. Well, indicator wise, or the way we read into charts, the 75-minute time frame I use for a short term is still in a downtrend and volatility has spiked up. Daily chart, which I use for an intermediate time frame, is clearly slipping both in terms of the momentum and the underlying trend. The higher time frames, for which I use the weekly, is still completely fine structure wise, going through a technical correction which is required in all healthy bull markets. The point is, or the intriguing point is the fact that intraday choppiness or volatility has all of a sudden spiked up. You are a long bias trader or a short bias trader, whether you have a long open position or short open position, you're not comfortable with your open positions unless you're completely hedged or any kind of strategy. So this uncomfortable state for a directional trader is likely to continue. Now, looking at the Nifty, the way it opened, traded and then bounced back, at the close it's quite encouraging from a bullish point of view, but trend wise and momentum wise it's still weak. I would say important level on the upside will be yesterday's high, because that's exactly from where we have seen this sell-off coming. Now, these are divergences on the 75-minute time frame, but generally such wide divergences do not lead to big bounce backs. Generally, they lead to shallow bounce backs. This is not a shallow bounce back, by the way. So I would suggest that, or I would rather extend from what I shared yesterday and then suggest. So what I shared yesterday is that if in any case you see a break below today's low, and I said this yesterday, so tonight it means yesterday's low, that is this one. The market is very likely to skid further down towards that 18,100, 130 levels. We're not close to that. We bounced back from an intraday low of 18,231 in today's trade. But I would maintain the bearishness or the possibility of further slipping down towards 18,100, at least from the short-term point of view, at least as long as yesterday's high is not taken out. If yesterday's high is taken out with conviction and it kind of stabilizes up here, this will mean that my short-term trend is or already has reversed up. In such a case, I think this would be the end of this particular correction. Too early to say, but yesterday's high is the level, which is around 18,520 on the upside. With a bounce back like this, we may see some bit of a slowdown tomorrow morning when it opens. We did see 40 points positive as we discussed tonight, but tomorrow morning can be a different story. Whatever be the point, I would suggest that keep it a little slow. Whether you're looking for long trades or even short trades, I would suggest that be a little careful. Because of the range expansion, it becomes really difficult to trade consistently, and the probability of getting stopped out in either direction becomes high. Bank Nifty also did the same thing. It also bounced back pretty well. By the way, it just inched below its recent zone of supports, which looks like this on the 75-minute time frame. So it just inched below this and then bounced back. Was this a fake move? Did it just flush out the weak hands and then bounce back? I think same logic I'll apply here. I'll use yesterday's high. At least the stock needs to go, or the index needs to go above this level. Till then, I'm not going to go aggressive tomorrow and trade too much or look to trade aggressively. Markets are, or the price behavior movement is aggressive in nature. So I probably need to play a little defensive tomorrow or probably for the rest of this week. Now, IT bounced back, energy bounced back, most of the sectoral indices bounced back. But one bounce back, or I would say two bounce backs, sectoral bounce back, which I really like, is energy, for I would say metals and then energy. We're looking at the CNX energy index, and I spoke about Reliance yesterday. So Reliance is a big contributor here. So we've got a move which is an outside bar and it has gone above yesterday's high. Reliance is the key contributor in this move. It's the metals which has also moved above or inched above yesterday's high, creating another outside bar. I did discuss about Tata Steel, and we did talk about CNX Metal yesterday, that the the sectoral index on a structural basis on a longer time frame, on the weekly time frame, is fine. It did not, if you notice, it did not slip significantly below yesterday's low. It kind of closed marginally above yesterday's close. It's created an outside bar. Keep an eye on stock like Vedanta, because Vedanta is on the verge of a breakout. So it's make or break for the stock here. Either you give a move above 320 or probably it will fail below 308. Tata Steel, Hindalco are stocks which matters a lot to this sector. I did carry my view about Tata Steel, expecting a move on the upside. But anyways, the stock opened down and then gave a bounce back. I think the stock needs a little bit of time. Same goes with Hindalco. But amongst the more appropriate stocks, I think Vedanta is one that you can keep a close look at. We'll talk about Reliance and wrap up this session. Now, Reliance definitely contributed in today's move, and we did see that CNX Energy. Now, this is also an outside bar. If you're looking for any kind of, let's say, if you feel your analysis tells you that the low is in place, and from here on for this week and the next week, markets are likely to stay up. If that's your view, then you should be looking for long trades. Yes. And if you're looking for long trades, then I would suggest go with those sectors and go with those stocks which have taken out yesterday's high, which probably on the 75-minute time frame is improving or already has moved into a short-term uptrend. Essentially go with the stronger counters and stick with them. On the other hand, if you think that this bounce back is also not going to last and it's going to open up further on the downside, then I would suggest go with those stocks and those sectors which could not take out yesterday's high better, that which even could not take out half away of yesterday's range, stocks which have closed in this zone, will be a clear sign of relative weakness. So brace yourself and place yourself accordingly in tomorrow's trade. I would suggest take it slow. Market's not in a slow mood, so I think we need to slow down. And once it slows down and gives us a nice breakout or another directional move, I think that's when we can pile up our aggression and look for long or maybe short trades. But for tomorrow, I'm keeping my options open, bias 50-50, but volatility is going to be on the higher side. So trade well and take care of yourselves. Good night.